Hi, I'm Brad Teal and this is our quarterly update market report for you for the first quarter of 2015. The market across the northwest of Melbourne has been very constantly good. It's a marketplace which features a diverse range of architecture and suburbs from the inner city, Victoriana, Edwardian, out to the newer homes out at Caroline Springs across our broad area of network coverage. Overall, the market has performed extremely well, in particular auction results in the inner suburbs. It's not unusual to see 4, 5, even last Saturday, 6 bidders competing vigorously for an auction. 17 Wickham Grove is a great example of that, with a reserve price of $1.3 million, selling under very competitive conditions for $1,530,000. Other successful sales, including a unit on the high side of Hudson Street, not far from Holmes Road, selling for $540,000, and a very successful sale last Saturday down at 30 Munro Street in Ascot Vale for $795,000, which was a single-fronted brick home, once again indicating the popularity of that Ascot Vale area. Once again in March, the Reserve Bank meeting provided a lot of commentary about whether interest rates would remain stable or they would drop them some more. They remained stable at 2.25%, and now the availability of banks providing home loan interest rates to buyers at between 4.5% and 5.25% is real. Buyers can continue to capitalise on low repayments of interest, and that provides them with more funds to bid up more vigorously in this marketplace. Another point of discussion in the property market is the issue of median prices, and they have become a bit of a focus and a little bit of a litmus test about how a certain marketplace is performing. And some of the changes have been quite astronomical over the last 4 or 5 years. Essendon remains very strong, up near the $1 million mark, but consistently in the $950,000 to $1 million. It's $962,000 at the moment. Strathmore has surged ahead of Essendon and is $1,026,500 as a median price. Once again indicating the strength of Strathmore, its strong streetscape, schools, on and off freeway access. Avondale Heights has a median price of $560,000, and the bigger blocks up there, which people are now looking at housing that is 40 and 45 years old, looking at demolishing those homes and building side-by-side units and or a brand new home on a very valuable block of land. Other interesting statistics include Brunswick having a median price at $812,000. That is a huge amount of money for an area where it's very high density, lots of single-fronted homes, and to have a median price of $812,000 is certainly a significant figure. Caroline Springs, $465,000, up significantly over the last couple of years, and once again now an indication of that suburb now being completely built out and providing secondary and third housing movements is an indication of the popularity of that area. Keeler, $655,000, a very strong result, and once again that bottom part of Keeler along the old village area of Eagling and Kennedy and Hislop and Arabin Street, Church Street are all very strong values with huge blocks of land, keeping the median price in Keeler up. Oak Park, $660,000, a really strong suburb, not mentioned very much. It's a small suburb, but it benefits enormously from the overflow from Strathmore to the west, and also a great alternative for housing from the more expensive Pascoe Vale area. Great on and off car access to the freeway, the train at both Pascoe Vale and Oak Park Station, the bike track to ride to work all the way along the Moonee Ponds Creek as well is a big benefit. The rental market throughout the northwest of Melbourne is also extremely strong. With so much employment at Melbourne Airport, the Royal Children's Hospital, Royal Melbourne Hospital, CBD, and easy on and off freeway access from so many points right around the Ring Road and the Tullamarine Freeway, it is a strong rental market. Some of the highlights are the consistent pattern of so many of these new properties coming on stream that have been built in apartment blocks over the last 2, 3, 4 years. Really high rentals, sometimes $450 per week for a 2-bedroom flat. Upward pressure on 1-bedroom flats, now probably closer to $300 a week as a median rent for a lot of 1-bedroom flats. And it's mainly transport and employment that sees people wanting to live in the northwest of Melbourne. A really strong indicator of the buoyancy of Melbourne's property market is the clearance rates as produced by the REIV every Saturday afternoon. Clearance rates at around about 70 to 75% is a really strong figure, and it's been as low as 55 over the years gone by and as high as 80 on really heady days, but this is a really consistent property market. Melbourne's growth over the last quarter has been 3.5%, only second to Sydney once again, and that's had extraordinary growth. So 3.5 is a solid amount of growth on properties across the whole CBD and metropolitan area of Melbourne. Thank you for watching our short report on the marketplace over the last quarter, and we welcome you to our next open time, or if you've got any questions regarding property, renting, buying, selling, whatever it might be, please look up Teal Real Estate. Thank you.